We grind on a daily. Bringing light to this world when it's raining. If you got any doubt, go ahead and wait and see. Only option is to win when you with the AC. Yeah, AC the game. Watch out, cause Big Bro is back in the game.
Yo, episode, I don't know, all right? But at the end of the day, it's still season 3. We still rolling smooth sailing, all right? We kind of changed a little bit of the template, as you can see. Usually we do podcasts every Sunday, but due to high demand, due to request, we kind of switched it up, all right? Joanne, you looking blurry. You look like I got my glasses off, cuz.
My little fuzzy?
You a little fuzzy, but it's cool. So high demand, y'all been asking for the weight loss videos. I mean, I'm no trainer, so I've just been giving y'all what y'all asked for. But nonetheless, we are back with the podcast this week. All right. Excited to have my guy, Adam Ummel, on here. But before we do that, got to give more kudos to y'all, and we got to talk about the Climber of the Week. Okay. So, Future Climbers program. All right. If you kept up with YouTube, you kept up with social media, you kept up with the past podcasts, you know that our main goal for a while was to start a youth leadership development program. We're fortunate enough to have that started completely. We have kids completely bought in. I cannot be more proud of them. I know some of them are listening right now, and I'm serious. Like, I'm not just saying that, like, really, these kids are impressing me. They are truly AC. All right. They are truly 100% bought into that always climbing mentality. So I'm proud of them. All right. But they're not the climbers of the week. All right. They haven't earned it yet. But let me tell you who the climber of the week is. Ryan Shores, in-house. All right. He is on our board. He's our quality control for our program. And Ryan Shores is kind of branching off. He's still with AC, but he's branching off so he can start his own thing. And it's a beautiful thing. It's a beautiful thing. He has started Let's Rewrite Reality. All right. So follow him. The Instagram tag and everything, the handle is on right now. All right. It's on right now. Make sure you follow him, show him some support. You're going to learn so many things about your brain and how your brain connects to your body. And he's going to explain it. This is a neuroscientist we're talking about. This guy graduated from Columbia. He was the only one in our entire class that went to an Ivy League school. This is who we're talking about. This guy is highly educated, and some of the words that is in these scientific things, it doesn't make sense to me. And I know it doesn't make sense to some of y'all. So he breaks it down and makes it very simple for us to understand. So that way we can know that for the rest of our lives and benefit other people's lives. It's a great idea, great concept. He's off to a great start. So make sure y'all show love to him. Shout out to my guy, Shores.
Shout out to Shores, man.
Now, let's get to the meat and the potatoes. All right. We got my guy, Adam Ummel, former Rocket, right? Former teammate, my guy. I want you to go ahead and start just by talking about who you are, right? Where you're from, what's your story, right? And then we'll get into it. But today's topic, just so y'all know, just so y'all get a little sneak peek, is we just talking about generational wealth. We talking about different things that we can do, different outlets of money that is out there that you may not know about. And even myself, I don't know about. So we had a quick talk before this, and I had no idea what he was talking about. You know what I'm saying? Just from seeing some of the things that he's typed up, seeing some of his videos, it still don't make sense to me. So I'm hoping to learn something as y'all learn. All right. So I'll give the floor to you, Adam.
What's going on, everybody? Glad to be here. And real quick, man, I just want to say shout out to you two for even doing something like this, taking time out of your day. You guys both got your own careers going on. So you guys having the ability to do this and, put on people who do different things, man, it's awesome. And I just want to say, Bryce, man, shout out to you. You're a natural born leader. And I'm just happy to be here, man. Share some knowledge about what I do with insurance and teach a little bit about infinite banking and how people can put this in their tool belts just to help secure their financial futures.
No doubt, man. No doubt. Much love.
Yeah.
So
what?
Tell me your story, man. I need to hear
a little bit about me. Man. So I guess you could say I'm just a 22-year-old, just learning life out here, man. Still I am a Rocket. I'm not a former Rocket. Still am a Rocket. Flew to Rocket. Finishing up my last year here at school, and I've been living out here in Ohio for probably the past 19 years of my life. And born and raised Oregon, Ohio. Not born, my apologies. I was born in Tucson, Arizona, but just raised out here in Oregon, Ohio. Went to high school, graduated in 2019. just teammates for a year with Bryce. I was a walk-on for football, played receiver, and I quit. I knew in my heart that football was not something I wanted to do. You know, I was showing up every day, and I could just tell the love for the game was not there like it used to be. And just going to college, I wanted to go to college to be a financial advisor and teach people about money. But as soon as I learned all about financial advising and investing people's money, I instantly said, nope, I'm not doing this either. It's a scammy place to be. A lot of misinformation happens in there. So kind of just shifted gears, started going for marketing and sales. And, you know, when I quit football, some things just started getting lined up for me. I, you know, got interested in investing in crypto, investing in stocks, and reading really good books that just helped enlighten me and like spring me to the right direction of where I'm going right now. And then I started going to, there's a local real estate investor meetup here. It's called RIA. And there should be RIAs across the country, different cities. And I went to this RIA here in Toledo, Ohio, nervous as could be, you know, didn't know what to expect. And the very first person that I spoke to was a vendor that worked at the event, and his name was Lupe. So I went up to this old gentleman, man, and he's just all excited. He's like, "Oh, young man, what brings you in here? What are you doing?" And I'm like, "Look, man, read a few books, read Rich Dad Poor Dad, read Think and Grow Rich, and man, they said come to your local real estate club. So here I am." And he instantly told me, he's like, "Well, hey, this is what I do." And he was also an insurance agent. He told me everything he did. He told me about infinite banking, and it went right over my head at first. And I was like, "Oh yeah, okay, definitely cool, man." And you know, as time went on, you know, every month for RIA, there'd be a meeting on the second Tuesday. So I still went to this meeting every month. And then about the third month, I got together with the older gentleman, Lupe. We sat down together, we started talking, and he said, "Hey, look, I want to bring you on as an agent. I want to teach you what I do, and I want you to be able to, you know, teach this to whomever you come across in life." So I was like, "Yeah, sure, absolutely." And I got to say, process for becoming an insurance agent, man, it's pretty tough. The very first time I took the test, man, I failed it. It was 150 questions. You had about an hour and a half to take it. All the questions were just, man, they looked the exact same. Every question, every answer looked the exact same. It was
that's test. Tough, man. I could speak to that, man. I failed my counselor exam the first time.
Oh yeah. How many questions is that?
It was 150 as well.
Oh yeah.
No short answer, all multiple choice, and I didn't bomb it. I barely failed, but man, I'm sitting there staring at these questions. I'm like, it was like, what's the best option here? It wasn't like, which is the option? It's what's the best option. So I'm like,
right.
Okay. Hey,
not yet.
Okay, that works.
Question,
B,
you know,
that works. C, D, all
had,
four of them work. So
like,
best option. It's tough, man. It's tough.
Yeah, you had to really dissect it, sit down.
I don't care what it was.
So the second time I took the test, I passed. Then I went through the process of just getting my license in the state of Ohio. And then from there, man, I've been going to Cleveland, Ohio. I've been going to Columbus, traveling to these different RIAs and teaching people what I got taught. And then after I became licensed, we had a guest speaker that changed my life and really helped me understand infinite banking. We had a guest speaker come into RIA for about an hour and a half. He spoke and just taught us everything about it. And his name was Dr. Brent Kessler. Very notable person in the insurance space, in the insurance industry, whatever you want to call it. But man, some of the stuff he was saying in this hour and a half that he had to speak in front of everybody at the RIA just absolutely blew my mind. And so right then and there, I was like, well, I'm doing something that I believe in. Seeing this guy do it, you know, and now I got to do it, and I got to follow through with it, and I got to teach whomever I come across. So that's pretty much about it about me, man.
Maybe Joe, maybe. Are you ready to be a guest speaker somewhere?
Talking about me?
Yeah.
Yeah, absolutely, man. That's exactly what I want to do. I want to be a guest speaker. I want to be, you know, I want to be able to speak in front of people and introduce them to what I was taught, because I mean, the information I'm about to share with you, it could be life-changing for you, definitely. So, you know, I'm excited to just dissect it, break it down right here for you guys.
Financial literacy fair for the youth.
We got that coming. It's brewing.
It's gotta be. I love that, man. I love
that.
Hey,
what I'm about to teach too, man. It's great. If you put it on, you can put it on a 1-year-old child, man. It's something phenomenal when you really learn about it.
So let's get into it, man. The point two, man, of the agenda, it says it straight up: infinite banking with question mark, question mark, question mark, question mark.
Yeah, I
What
like the way you
is it?
worded it.
What is it?
What is it, man? All right, here we go. First of all, we're gonna pause because the first thing that we actually have to do, Bryce and Jovan, is we have to talk about what is money. So I'm gonna pause you right there real quick, Bryce. I'm gonna change lanes real quick for about 5 minutes. I got a few questions to ask you two people. Okay.
All right.
Okay, let's go.
So real quick for you two, what is money? What does it mean to you? How do you use it? Where do you put it? And whichever one of you guys wants to go first can go first.
All right, let's tag team, Joe.
Okay.
Yeah.
Okay. So for me, money is a form of I've never been asked this question. What is money? Okay, so Jovan,
nice.
you know what money is, bro?
Tag me in. So, I mean, for us, I think it's a resource, like how we get our donors, our grants, and stuff like that, so we can help out other people. It's a form of, I guess you want to say, people use financial freedom, in a sense, but for us, it's a way to liberate other people that surround us.
But he's saying, like, what's the definition? Yeah, so like, what's the
the
general definition
Yeah,
of money?
just your personal definition,
General
man. Break it
definition
down, quick little
Of
sentence.
money.
That's my personal definition.
I like that word resource. It's a resource
Resource
to get things that you need, I guess. To
That's a great way to put
purchase things that you need.
That's a great way to put it too.
The big question that I have, and I haven't thought about it in a while. I'm not gonna act like I never thought about it. But the big question I have is who is in the power to even make money? Like, why is there money? Why didn't we just fight it out, or why don't we just trade things off?
Hey, man, we can talk about that.
Dollar bill. When did this dollar bill
hours.
bring value to my, like, when did it become a thing? Why is this little bit of copper worth 1 cent? That's my question. But my definition is, I guess, a loose definition would be money is a resource to purchase things that you may want or need. It's just a matter of why is it at that value that I don't get.
That's good.
Yeah.
So
Real
real quick,
questions?
we can get to the how, where you put it and stuff like that in a sec. But I just wanted to share real quick. So all money to me, this is my definition upon my, reading books, talking to other people, networking. Money to me is simply just a means of exchange. And like you guys said, access to more information. That is, to me, that is literally it about money. The only two things that I've ever really come across that really spoke to me about what money is those two things. It's simply saying, hey, I'm trading time for money. I want to go to the Bahamas. I give you money for plane ticket. You give me the plane ticket. I go to the hotel. I give you money. I want food. I give you money. You give me food. So simply, we can all agree it's just a means of exchange right there, right?
Yeah.
Absolutely. So now let's talk about where we're putting it. I'm going to assume you gentlemen are putting your money, in the bank, putting your money in outside investments. And, if you guys want to elaborate a little bit on that, you guys can elaborate on that. But that's pretty much where we put our money for the most part, right?
Yeah. So
and
for
this
me,
is where
I know Jovan does more. Jovan's better than this. For me, I'm behind the 8 ball compared to this generation of young adults. This generation of young adults are very into stock, very into even gambling, sports betting. Let's be honest, like any way they can get some type of investment, whether it's a dumb investment or not. Me, I did Robinhood for like 2 years, and I have not taken any money out. It's just sitting on Robinhood. I have not gotten a single other app. So the rest of my money is in a savings account, and that's it. So I'm behind. I'm behind the 8 ball when it comes to where our generation is headed, which is investing early in their life.
That's okay.
Yep. So
what about you, Jovan?
For me, I got, of course, my Roth IRA that I invest in every 2 months with some stocks in there. I have, of course, my what I invest in for my job, and then what I don't put, because some months be tough. But what I put in my savings, I put into my American Express savings account instead, because it's more of a high interest rate, which is like, it fluctuates between every year. It gets better and better between 2% and 3%, which is still pretty good for very close to all market returns. And then, of course, life insurance. I have a whole life policy too, which I think you're about to go into a little bit more with the infinite banking and how that works. But those are my primary sources where I put my money at right now.
So I do have life insurance. I don't get it all. My wife did it. And then I also invest with my paychecks, like through work. So I forgot that too.
And that too. Another policy that's like a term.
Yep.
So, that what you two both just said is absolutely perfect and absolutely fine. That's the way we, majority of us are taught to put our money in a savings account, Roth IRA, or we invest through some type of programs connected through where we work at. And you guys both have life insurance. So, hey, congratulations for you two, taking care of a business as men. I believe that's an important thing to have on yourself. Leaving your family with a financial burden would just be something absolutely ridiculous. But my next thing I want to move into, you two, is the banks, because we're going to talk about exactly what banks do and exactly how they make money. And I got to say, they are pretty damn good at making money. So, man, banks are really good at making money. And here's why. They make a bunch of money off of people's interest. And when we put our money into the bank, they're allowed to do something called fractional reserve, which means they are allowed to legally lend out 10x of whatever we have put in the bank. I don't know how it's legal, but it is legal, gentlemen. So if you had $1,000 in the bank, bank's technically allowed to lend out $10,000. And then when they lend out that $10,000, there's usually interest behind that $10,000. And that's where they make their money. They're able to make their money on that interest, fractional reserving. And then, of course, you see your little digits and numbers on the screen on your phone of what's in your bank account. Yeah, you have access to that money, but it's not your money, which is kind of like why we're kind of talking about the topic of creating your own banking system and having full control of your money, liquidity, use, and control of your money. Those are the three main things: liquidity, use, and control. Now, I want to ask you a question, Jovan. When you invest in your Roth IRA, there is a cap. There's a max on that. Do you know what that max is?
For the year, I believe it's 75,000.
I think it's like lower than that. Yours is 75,000.
Let me check. I think it's somewhere around there.
I think it was 6,000. I think they bumped it up to 8,000.
No, I don't think it's that low.
But with these financial tools, there's usually a cap. There's not a cap. There's usually something that withholds you from getting access or liquidity from that money. If you have your money in some type of, not a Roth IRA, but a mutual fund, if you have your money locked up in a mutual fund, you can't touch that money technically until you are 59 and a half. And that's kind of like another reason why.
That's what I'm doing. I think I got the mutual fund.
Right. And that's kind of why, talking about money is something important. And when we're talking about money, man, 59 and a half, it's kind of a long ways away. And I can almost assure you, I'm scared for people who have their money in mutual funds, just because we don't know what's going to happen when we're 59 and a half. The old financial ways of using your money and the banks and all these high-powered people telling us where to put our money. We're putting all of our money in something and we don't even have access to it. Now, I said technically you don't have access to it because if you wanted to access some of your money from a mutual fund, you got to go through the paperwork. You got to have, you got to take out you can only take out a maximum of 70%. And then you're also getting charged interest on top of that. So, being 59 and a half years old and, having the badge of honor saying, hey, you have access to this money at 59 and a half. To me, that's not fair. I don't like that one bit. And I say that because I really think my generation, the Zoomers, maybe even the millennials, man, I think we're going to be left holding the bag and we're going to get screwed out of a lot of money because I just don't see how mutual funds, all these things are going to keep working until we're 59 and a half years old. So let's get into infinite banking, man. Let's talk about it. And, we're going to talk one more portion. I want to talk about the banks. Banks own the most life insurance out of anybody. And I'm going to list off some statistics here. And so bear with me. So over 3,000 banks own more than 190 billion in cash value life insurance. Bank of America has more money in cash value $22 billion than their total assets, which is around $11 billion. JP Morgan Chase has $11 billion in cash value life insurance and $11 billion in other assets. Wells Fargo has $19.3 billion in cash value life insurance and $10 billion in other assets. Majority of their money is in life insurance versus other assets. And why? Because life insurance has the ability to give you guaranteed growth, no questions asked, guaranteed growth, and the ability to still have access to that money without ever even touching the money you put in the first place. So let's break it down. I want to show you guys. I want to show you guys an example real quick too. I'm allowed to share my screen, right?
I don't know.
I should be able to.
I think I give them access to it.
Yeah, I need access.
You know how to do that?
I know how to do it, but it says I need. It says I need access.
So go to like where it says share screen, and then I think you got to click like there should be like an arrow next to it.
I do see that, Jovan. It just says host disabled participant screen sharing. So if I can't,
I'm saying on Bryce's side where it says all participants.
Oh, okay.
How about now?
There we go. Let's do it. Let's do it. You guys can see my screen good?
For sure.
Yep.
All right, cool.
First of all, shout out to this is a MacBook, correct? Shout out to the MacBook. All right.
Yep. Shout out to the Mac.
Top of the line. Anything else?
All right. So what I'm about to show you two is an example of how you can get every single dollar back for any car that you purchase from the rest of your life.
Time out.
If you had something set up like this.
If you're watching the podcast, go to YouTube. All right. We watching the screen right now. We about to get put on to some serious game. So make sure y'all go. If you listening to the podcast, head over to the YouTube. Fast forward to this part. All right.
Yeah.
Now, and YouTube watching or YouTube listening in and any viewers watching, what I'm about to tell you is something where you need to have an open mind and you need to start acting and thinking like the bank. That is simply my job, is to teach you how to act like a bank.
Mr. Be the bank.
Here we go. And I want you two to write this down too. If you got some scratch paper near you, write this down too.
I got my iPad over here.
Mm-hmm.
So I want you two to pretend that you guys have your money in my bank. This bank is called Adam's Bank, okay? And the example would be the same for both of you. You guys both have $25,000 in Adam's Bank, okay? Now, this $25,000 is subject to 5% annual interest. So, Jovan, you mentioned earlier about how you have your money making you interest, correct, in the bank?
Yes, correct.
Now, that's probably very low. I know I bank at Chase and I get 0.05 on my money. It's absolute dog crap. There's some credit unions out there, I'm sure, that can get maybe to 3%, upwards to a little higher. But what we're going to be saying and talking about is you guys are at my bank earning 5% on your money. So just put 25,000 at 5%. And now I'm going to type this in also on here.
All right, let me tell you, Adam, I'm not good at math, so
me either.
Hey, bear with us.
I'm a counselor.
Even though you guys aren't good at math,
I ain't a businessman.
Hey, you guys are going to see this
money now, but
you guys are going to see this right on the screen. That you won't even need any math because I'm sure you guys know which numbers are worth more than what other numbers. So let's get into it. So $25,000, no monthly contribution, and let's say you had this sitting in my bank at 5%, and you never added anything to this for the next 5 years. So 5 years. At a 5% interest rate. This is all we're going to be putting into this computer. And this is just a simple compound interest calculator.
Mm-hmm.
So if we were to put 25,000 in, never ever touch it for 5 years. Are we all seeing this number and agreeing that's $31,907?
Yep.
And this is simply because your money, that $25,000, if you never put anything into this, every single year at 5%, your money grows at 5%. So now that the next year grows at 5%, 5%, 5%. And all we simply did was we changed one thing, and that's where our money went first. Somewhere that earned us 5% interest rate. So now that you see this, I want to ask you two. If you guys both had this $25,000 in the bank, and both of you guys wanted to go buy a car, what would you do? Would you ask me to take out the full $25,000 and go buy the car cash? Or would you let me, the banker, say, no, here's what you're going to do. Keep the money sitting in this account for 5 years. Take out a loan from the bank for 5 years at 6%. Now, I just said this, at 6%. If you are earning at 5 and you're paying out at 6, where do you think you would earn or pay out more interest at? Where you earned 5 or you're paying out at 6?
Definitely paying 6.
Right.
Jovan, what do you think?
Paying out at 6.
Okay, now I'm gonna ask you two. Why do you think that is?
Because if I'm paying 6%, that's more than me receiving 5%. That's how I look at it.
I'm gonna let you guys both in on a little secret, all right? You're wrong. And here's exactly why. A car payment is simple interest. When you pay it off, every single year, the interest comes down a little bit, keeps coming down. Simple interest. What I am talking about is compound interest, uninterrupted compound interest. So right then and there, that's the only thing that we're talking about is compound interest. And I'm going to show you guys. So let's take the same example. You guys said, hey, I want to buy a $25,000 car.
Hold on, this is like my real life right now. So hold on.
For 60 months, 60 months, 5 years.
Okay.
Let's just say it's a used vehicle at 6% interest rate.
Sound about right. Okay.
You guys see this? That's the principal. That's the original amount of the $25,000. And this is how much money you paid out in interest. Let's call it $4,000. I'm no genius, but you too. $25,000 plus $4,000. What does that equal?
Hold on, carry. No, I'm just playing. So that's about 20. That's 29.
Exactly. So we're gonna look. We're going right back to the screen. Does this screen show you more money in interest that you made in 5 years versus what you would have paid out at 6% in 5 years? That right there is in a nutshell what infinite banking is. Infinite banking is strategically putting your money in an insurance policy that guarantees you 5 to 6% on your money year over year, meaning all the money you put in every single year, it will grow. It will grow. There's no floor. It is consecutive, guaranteed growth. There's only 2 financial products in the world that have guaranteed growth, and it is a whole life insurance policy and it is an indexed universal life insurance policy. We're not going to talk about indexed universal. I'm going to talk strictly about whole life insurance because there's no hiccups. It is consecutive growth year over year. So when I show you this example of this car payment, I showed you how the interest over time makes you more money than what you would pay out. So I want to ask you guys something real quick. If you had something set up like this and you treated yourself like the bank and you paid yourself that little monthly car payment that you would pay out to the bank, if you could turn around and change that function and pay yourself back plus that interest, would that be something that interests you guys?
Absolutely.
Because
I'm getting a car. I need a car. So yeah, let's keep talking.
So what's happening here is when you set up an insurance policy, you guys both have an insurance policy. What's the purpose of a life insurance policy?
I mean, for the majority is, just to protect your family.
Protects your family. And that's because it'll pay out a future death benefit. That's what life insurance is, man. That's the basic core concept of what life insurance is. I like to call that just death insurance. Okay. What I'm about to teach you guys, what I am teaching you guys right now is life insurance and how to use it while you're alive. So as you can see, We're talking about having access to money now and not access later on in life. So when we're setting up an insurance policy, and then when we are able to have access to the cash value, I want you guys to both write this down. What you're doing is accessing your future death benefit early on.
Right.
So, for example, let's say you were someone who said, well, hey, I want to start my own infinite banking concept. I have $10,000. You put in the $10,000, and let's say you have a $200,000 death benefit. So the very first year when you put your money into your own policy, that $10,000 that's subject to growing at 5 to 6%, you know that you have access to somewhere upwards up to 90%, depending upon on how your agent designs the policy. So 90% of $10,000 is $9,000, correct?
Yeah.
So let's say you set up a policy correctly. The policy was set up correctly. Your agent set it up to where you have access from day one of having your policy put in force. You have access to 90% of $10,000 that you put in. Now, I want to ask you two, if you guys both have that access to that $9,000, where does it come out of? Does it come out of the money you put in, or does it come out of the future death benefit?
Wait, repeat that one more time. I'm sorry.
I was wrong last time.
Let's say you got the policy put in force. You have
Right.
$10,000 in your policy. You have a $200,000 death benefit.
Right.
And your cash value that's guaranteed on your policy says you have access to 90% of that.
Right.
But your cash value is in relation to how much you can borrow from how much you have put in. So
Right.
you get out what you put in. So that
Right.
original $10,000 that you put in, the very first day policy's put in force, you have access to 90% of your policy. You talk to your agent, you get that $9,000 back. Where does it come out of?
Your death benefit.
Money. Exactly. It comes out of your death benefit, Jovan. And here's why. Insurance companies, most of the time, they don't like paying out a large death benefit. It's as simple as that. Insurance companies, man, they fight tooth and nail about this stuff, and they do it because if they don't have to pay out a $200,000 death benefit, they don't want to. It's as simple as that. Okay.
Yeah.
So you are exactly 100% right. You are borrowing from your future death benefit. And the cool thing about doing this is it's all done on a tax-free basis.
Yeah.
So that is simply why banks do this. They have lots of life insurance because their money is subject to growing year over year. They have access to their money, liquidity, and control over it. Imagine a bank making a guaranteed 6% on a couple $1 billion. They have access to 90% of that. They take that out, put it into some other investments like real estate, bonds. They're making a killing on their money because they're making money in more than one place. They're making money in 2, 3, sometimes even upwards to 4 places at one time.
Mm-hmm.
So all we are talking about here today on this podcast is simply becoming the bank, changing where you put your money first. Now, I'm not saying put all your money in an insurance policy. That would be absolutely ridiculous. But what I'm saying is if you can set up a foundational asset that grows every single year, no questions asked, and insurance companies, they've been around for a very long time. Insurance companies all across the industry, they're all paying out anywhere between 5 to 6% guaranteed year over year. That's very common. That's very normal. But there's only a specific amount of insurance companies that allow you to have access to a high cash value. And that is certain companies that are mutual insurance companies. They're companies that allow you to do this. And they're happy to do that because they know that you are agreeing to the terms and conditions of saying, hey, if I borrow X amount of money, that money, if I don't pay it back, will become subtracted from my future death benefit. So if you guys have any questions, I mean, I just kind of try to break it down as simple as I could without showing illustrations and too many things on the screen. I wanted to share with you guys this example of the car buying thing because this is an example I was showed. And when I got showed it,
first question.
Stop.
Yep.
This is like just validating it, honestly. Like you already said it, but
yeah.
So with this infinite baking, let's say I put 20K in, 20 racks in, right? I put 20 racks in. And I take out 18K first year, 90%. It's coming from the death benefit, right? So $200,000 death benefit. Now I'm looking at 180. I gotta pay that back, or like I don't got. That's what I don't get. Like, or do I?
So
is it just a matter of like, hey man, your death benefit is now 180. If you don't pay it back, that's on you.
Right. So that there's two ways to go about it. I preach play an honest banker. Of course, pay it back over time.
That's
The
what
cool
I'm
part
thinking,
about it is you can take your time to pay back what you borrow. Remember how I said earlier, if the insurance company does not have to pay you the full death benefit, they're more than happy to not do that. So if you don't pay that back, that's on you. Now, when you do borrow the money, there is an interest rate of 5% on top of that. But the whole point of it is having access to your money now. We can't put our money in mutual funds and then take it back and use it and have that still grow. Whole life insurance is the only product that I know about where you can put it somewhere, it will grow year over year, and the amount of money that you make on your interest, it'll outweigh how much you're spending and paying out in interest day and night. We just talked about it. If your bank account's making 5 at Adam's bank, and you bought a car, you used the $25,000 that you took out of your policy, you know for a fact that you're going to be making more in interest than you would. But like I said, though, the whole point of it is to play honest banker.
Mm-hmm.
If you bought a car today, you're going to pay the bank back every single month, are you not?
Correct.
That's what I'm doing. I know that's what I'm doing right now.
Yep.
I'm paying the bank. But I did change where I put majority of my money. And that's in a whole life insurance policy with a mutual insurance company that pays dividends also and gives me the ability to do this. Because now what I'm doing is I'm repositioning where my money goes, and I can pay off my debts and know that instead of me just paying off my debt and that money's gone, I'm putting my money to work. And then every single year, my policy grows in the amount that I can borrow from my policy. And I can use that to pay off debt, further my investments, give money to a foundation.
Jovan, don't forget your question. But how do you go about even getting that money? Like, you can't just go to the bank. So, like, how do you get that money?
You just call up hopefully your insurance agent knows what he's doing. You call him up and say, hey, I see on my illustration of my policy that I have access to X amount of dollars. I want that. Your insurance company or your insurance agent hang up, talk to his case manager, his or her case manager. And then from there, you should receive the money within 3 days in your bank account. All you do is just hook up the way you paid. That's where your money comes back to.
Makes sense.
So I'm just going to step in real quick, because, first of all, I just want to change the tone to a more serious note. I'm a big advocate for life insurance. Over the past couple of weeks, me and Bryce and members of the AC have lost some very close members of the family.
Sorry.
It's very important for you all to take care of your families once you pass away, whether it's whole life insurance, which is throughout the duration of your whole life, or term insurance policy, which is, of course, it's term, so it stops at a certain point. It's very important that you look into that, so you're not a burden to those that when you pass away. You see a lot of people doing GoFundMe accounts and stuff like that. It always breaks my heart when I see that, because they have to do that, and that's their responsibility now, because that person didn't really take the steps necessary in planning for when their time is up. So everyone's going to pass at a certain point. Everyone's got an expiration date. Definitely take the time and look into getting an insurance policy and start planning ahead. But now going into infant bacon, not so much pushback, but with the AC, I do feel like we should give as much knowledge as we can and step in if I'm wrong at any point. But as far as like the infinite bacon, I've heard of this before with the whole life policy. That's actually not a key reason why I got a whole life policy, but just so in emergencies. So like if I get sick at an older age, That way I can pull out of my insurance policy. That way, if at any point I don't have the money to pay for, like when I'm ill, get older, then it could be used for that. So in terms of using it while you're alive, your living policy, you can still flex it and use it for your death benefit. I think it's important to note that once you get a high whole life policy, whole life policies are more expensive than term, universal, all the other things. Term is the cheapest because it's a shorter stint. So you're paying it over time. 70%, maybe even higher, of those term policies never get paid out. So when we talk about insurance companies really getting paid out, they're getting a lot of their money through term life insurance policies. Which is why, me and Bryce, we talk about it all the time, like just like planning, like according for the future, because I know some people who have term insurance policy, which is great, and there's nothing wrong with them, because you can actually roll them over into whole life once you get older. But it's cheaper to get a whole life policy the younger you are. The older you get, they add up the smoking, the drinking. If you do those certain things, they add up the age. Your policy starts to get higher and higher. And then universal, of course, is similar to whole life, cheaper, but without the benefit of the living, the policy. Is that correct?
Mm-hmm.
Yeah,
Right
you spoke,
and then
you spoke about a lot of correct things there, absolutely.
And then as you pull away from your policy, you are going to have to pay back your policy the death benefit. So, like for me, for example, if I got $100,000 policy and I want to invest it into a house or whatever, I pull a certain amount out. I am paying that out, but it's planned in a way that you're paying for it until that set time that you schedule it for it to be paid off. So like if you schedule it for it to be done, paid off at 90 or 100 years old, which, typically you don't last that long on average, but that's the beautiful thing about whole life, because if you die at between now and 70 or 80 years old, you're paid off that $200,000 or $100,000 example. And then when you start to pull that money out, now you have to readjust it, because now if you are 200,000, you pull out 86. Now you still owe that 86, but you're paying a higher premium on your whole life policy. So I really think it really depends on what you are in your life to be able to pay a certain amount. You know what I mean? I'm not saying anything about infinite banking being a bad thing. I think it's really important for you to be financially educated on what you can actually pay for the infinite banking or pay out to that whole life policy month to month, because you don't want to break yourself trying to be a bank.
Mm-hmm.
Absolutely. And the reason why I speak about this stuff is because, like Bryce said earlier, he has his money in a savings account. Now, whatever that savings account is making, imagine if he knew about something like this a year ago,
right?
And he was able to plug his money into here instead of plugging his money into the bank saving account that's not earning him crap. And really just being able to have something like that and still have the access to your money. And I kind of want to speak about what you said, Jovan, about, having to pay it back. That's for certain companies. There's a very select few that allow you to even do infinite banking. And if done properly, if you're with the right company, you don't have to pay that back. But like I said, we're playing honest banker over here. I'm treating my money just as if I was borrowing it from the bank.
Mm-hmm.
And all I'm doing differently, instead of putting all my money in the bank, I just put some of that in insurance policy.
And I'll add in one other thing just real quick about like mutual insurance companies. I prefer those personally, because if your objective is to be investing in yourself, you want to use mutual insurance companies versus which are other ones are stocks, right? And those are very inconsistent in the growth year to year, because you're relying on it's within the stock market, the investor, and they're more obligated. Their first obligation isn't to you, the payer. There is to the stock and the company that owns it is the priority. So that interest rate you get in a stock company or a stock insurance is not the same as a mutual.
Yeah, absolutely. When you're a mutual shareholder of an insurance company, you're a part owner, and that's why you're subject to getting that high interest rate on your money, is because you're part of the insurance company. Mm-hmm. So you are 100% correct on that. And then also, I don't know which one you guys mentioned it. When you are at a younger age, the rates are better for you. If you're a female, the rates are better for you. especially
I
with
know
whole
it's
life
crazy too.
insurance.
I'm still mad about that one.
That ain't fair.
The women get top policies.
Yeah, no. Hey,
They
any ladies
way
listening,
cheaper,
yeah,
too.
get your policy.
Hey,
Learn
future
about some
climbers,
things.
y'all heard it. All right, we got plenty
Yeah,
of
get y'all-
girls in the
get y'all-
future climbers program.
Take care of
Right
your
on,
life, man.
right on. Yeah, man, that's
I-
infinite banking. That's what I teach people. That's what I do, and
Now-
I'm happy to do it, man.
Another question I got for you, because I know. Because listen, when I was going to get my insurance policy, I had a bunch of questions. I used to do some research.
Yeah.
Like I want to know exactly, because not all insurance companies, once you pass away, they don't pay out the same. They don't pay as quickly. So I want to know what is the best one I can get overall. That's when I pass away, it's not going to be no issues. Like I know I've heard of Global Life and them being kind of like scammy, not really getting your money, especially in time for when you pass away. I just want to know: have you seen any insurance companies really the more credible ones that we see more so like on the stadiums, on the arenas that partake in the infinite banking or the idea of infinite banking, or are they more expensive, or is there a route that you go through? Basically, how would one navigate that process? Because I don't want them to feel or get scammed or not. Yeah, get scammed or get not have a great policy that's not going to still take care of them in the long run.
So if I could break that down, the companies that you see on stadiums, like NFL stadiums, I don't know what other stadiums are really. I see other insurance companies on. Those companies are big financial firms, and they do stuff where they bundle your insurance with your home, auto, life, health, etc. And then they also tell you to invest here. So when I talk about infinite banking, it's making sure that you're with the correct agent that's with the correct company that can do this specific thing for you. And I'm going to tell you guys why I think other agents and other financial educators don't know about this. And it's simply because of education. If you have somebody who's a higher up guy and he knows you're going to make less commission on doing something like this for a client, do you think he's going to want to consecutively do that? Do you think he's going to want to teach the people that are coming underneath him to do something like this where you don't make as big of a commission? Because when I set up these policies, there's a specific way you set it up. I don't want to bore you guys with the numbers, but the way that you engineer the policy and set up these certain things, agents like me, we take a hit on the commission for this. But simply, if I'm able to teach someone something new about something related to financials, that's kind of what I, see myself doing from here on out. And, just growing up, I lived with a single mother. I got to see her hardships. I had an older brother too. I got to just watch them and observe them and learn from them. So being in the position I'm in to be a financial educator and teach people something new about insurance, something different, I'm just blessed, and I love what I do.
Yeah. And Adam, I've seen your Instagram too. I've been peeping what you've been doing.
It's gonna blow
really
up.
Active.
It's gonna blow
You're
up.
real active on Instagram. I think you do give a lot of great content. But grand scheme of things, like where do you see yourself a year from now? And then if you had to put a prediction, just a bold prediction right now.
So that way when we come back, we gonna throw this up when you make it. You know what I'm saying?
Yep.
Oh man, dude, I see myself doing a lot. I see myself traveling. I'm learning a lot about credit, business credit. My credit's good right now, and I'm just looking to further that into getting some business credit. I'm sure that might be another topic for another day, but I'm an investor, and I'm looking to get my first rental property. I'm looking to get my first fix and flip this year, and I'm just really big on having assets that can produce for the life that I want to live. I'd like to travel. I'd like to teach people about what I do with money. I want to be able to have Airbnbs in multiple states. And what I do with this insurance right now, like you guys said, I really do hope, the Instagram can blow up, and I can bring some people on to help me make better content, because I think I'm lacking in the content. I wish I made some better stuff and could do different things.
It's not easy, man.
Right. No, I'm working with what I'm working with,
It's
and
not
I'm having a great time. I have videos that pop, and then I have videos that just don't pop. But it's not about that, man. It's all about just putting myself out there. I had just a crazy, just growing up, man. I had crazy thoughts about like what social media is and where it's going. And growing up in high school, man, I was never one that really posted much on social media in high school. And I always just saw all these people just posting stupid pictures of them doing this or them going here. And it struck me. I was like, well, if I'm going to be on this thing and I can have access to the 8 billion people that are living on this planet, man, I need to be posting something that's beneficial, has value, and something that I can be rewarded for doing. You know, I don't want to just be posting random pictures of stupid crap that nobody cares about.
Mm-hmm.
So I do hope that the social medias, you know, can blow up. I can do something with that.
And here's the craziest part with social media too. And this is what I tell Jovan all the time. I tell really all the guys that I work with AC, stuff like this podcast. All right. By the grace of God, it's gonna blow up this episode right now. But in reality, we only got a couple videos over 1,000 views. And the funny thing is, like, have you ever heard of like Earn Your Leisure?
No, I have not.
So you got to search them. They're like huge, like massive. It's Earn Your Leisure on Instagram. But they did a podcast and they talked about it too. Like they're recycling some of the stuff that they did that nobody watched. So like I just think about, man, even us manifesting, you know, the fact that we blow up, our podcast might become big one day. And shoot, next thing you know, we're gonna do the same episode again. They're gonna be like, oh, this is the greatest thing ever. I'm gonna be like, man, y'all should have listened the first time we said it. You know what I'm saying?
Almost like a weight loss video you did.
Yeah, right. I did. Man, we got this weight loss video. It's got like 70K views right now. I literally said That's awesome. Same exact thing. I said the same exact thing twice, and it's on the same YouTube page. Like, and nobody saw it. You know what I'm saying? But all of a sudden, this one is just, oh, this is the greatest thing ever. And I'm not downing anybody. It's just funny. Like, it's just funny. Right. Because all I did was recycle until it finally hit. I just kept posting it. I posted it 3 times in 3 different ways, and it finally hit. And they loving it. They saying it's great content. And I'm saying, my point is the first video, I'm like, I already knew it was great content. It's just a matter of y'all seeing it.
Right.
So, yeah. It's the same thing with you, man. I already know, man, you got great content. I'll be watching the videos all the time. And really, man, bro, I'll be zooming through Instagram, bro. I'll be zooming through people's stuff. But when I see yours, I always stop. And I know it's gonna be big, man. And when it is, you're gonna have you probably gonna have that same feeling, like, bro, I've been saying this. Y'all ain't really listening.
Saying the same thing. I gotta follow you. I gotta follow you on my personal Instagram because I'll be watching you on the AC. I need to follow you on it right after we get off. But man, I think the most important thing, like it just in life, is just staying consistent with it. You know what I mean? And I think you've been really consistent with your content, really consistent with your message and what you've been doing. And going back to the insurance, and one of the questions I have is, like, do you know the type of insurance where you can set it for your kids at a certain age? Like, they don't have to be old. They can be like when they get to 18 or 20 and they pay out an insurance benefit. You know what I'm talking about? It's like when they're babies.
You know, I don't really have any knowledge on that. I know that, dude, there's so many insurance companies. There's so many different policies out there. There's so many different ways to set them up, different ages. Yeah. I mean, the insurance is actually, I mean, dude, it doesn't get enough credit, honestly. It is deep. It is really deep, you know, but I think everyone just has the blinders on and they're so set on doing what I hate saying doing what our parents did, but doing what our parents did, man, I really don't see how all that is going to work. I just don't. Like the pension, retirement stuff, man. Like I just see our age group, man, just getting left holding the bag, and that's not working at all.
Well, that's something I wish I had as a kid. I wish I had that payout, whatever that type of insurance is, because I'll be saying, ooh.
Right.
But you know, what advice would you give to a young kid though, right now watching this podcast?
This is good. If you're a kid, read some damn books. I am so serious about this.
No,
man.
It's facts, though. Facts.
Bro, put down the phone and just read a damn book. Please, please, please.
Please.
Read something. Read something about just self-development, self-enlightenment.
Man, he ain't talking about Harry Potter, y'all.
Not no whippy kid.
Hey, some great books out there, man, are Think and Grow Rich, Rich Dad, Poor Dad, The Power of Now. I mean, guys, these phones are great. You can figure out a lot of stuff, but when you're just sitting here looking at the screen, scrolling, man, I think our brains are just getting so just clouded with just so much information. There's so much information on these phones, man. But when you sit and read a book, there's no screen, there's no bright lights in your eyes. You're just sitting there, your thoughts, and reading text. I mean, it's
And,
simple,
and
guys.
I got plenty
Read.
of audio books. I mean, of digital books, but man, there's nothing better than
Right.
that paper, man.
Just-
That
But no,
paper.
all jokes aside, definitely start reading, man. If you're out there, start reading. Get with like-minded individuals. Be open to learning new things, man. You never know what you can be taught. You never know what you can be taught or what you can learn, and you just got to get out there and really figure out life for yourself. You know, get off the phones.
Yeah, I think that's really important too, because I mean, with it being Black History Month, of course, I think our demographic could do a better job being financially educated. And I think once you're, at least when my kids, once they old enough to read, they're gonna start learning what certain things mean financially, what dad got going on, and really understanding what they have in the future and what they can have in the future. But what's something that you would tell yourself or a 17-year-old you with the knowledge that you have right now?
Man, some people might not like this one. I wouldn't go to college, man, to be honest. I probably would have, just dialed in and just completely just went all in on what I'm doing now and what I will be doing. I mean, school's great. I've met a lot of great people. I'm doing a lot of stuff that I love, but I'm not getting any real world experience, I feel like I have been this past year of traveling, putting myself out there, learning about tax stuff, learning about how to grow my money tax free, learning about insurance, learning about real estate investing. I mean, what I just told you guys, you're not going to learn this ever in school. I can guarantee you that. So
Yeah, that's valid.
I'm not saying anything bad about school. Go to school if that's what you want to do. But for me, man, it would have just been, if I knew all the information I knew now, I for sure probably would not have been to school.
And you know what I heard, Bryce? He found his passion. He found his passion at a young age. Found what he wanted to do, his purpose in life. And I think that's what the future. I'm gonna keep tagging in future climbers. That's what
love them kids.
That's what the future climbers is.
Love them kids.
Yeah, tell me a little more about that. What do you guys do? You guys are you guys talking about like an event where you guys have 20, 30, 40, 50 kids?
So we got like 30 kids in this program, and it's at our alma mater. Hoping to expand, but man, we trying to change. We trying to build world changers, not just awesome. Not just kids that are going to be the next manager, but the true next like world changers. Because me personally, I don't like toot my own horn, only sometimes. And right now I'm gonna do it. But I feel like I'm a world changer, bro. I feel like one day I'm gonna be a world changer.
A conduit of change.
Yeah. So that's what we're trying to build is the next world changers after me. You know what I'm saying? After Jovan, after everybody, even on the podcast. I'm trying to really build world changers. I'm trying to build people, young people that can realize like, at my age, 15, 16, 17, 18, I have a lot more confidence than I think I do. I have a lot more ability than I think I do. And I have the ability to speak and make a true difference, right? I got all these great ideas. These teens, man, you should hear them talk. They got so many great ideas. All they need is a little help from adults. Like you ask them, how are we going to stop the violence in Akron? They come up with all these grand ideas. I'm not going to share because some people might be watching some other programs. Good. Yeah. But they come up with all these ideas, and all they need is for us to be like, okay, where's that money gonna come from? And they're like, they really thinking. We don't give them the answer. We make them think critically. Before you know it, they come up with these great ideas. They start collaborating. They learn how to communicate with each other because they lost that skill during COVID, but they're gaining it back, and it's impressive to see. I mean, literally, we've been going on 3 weeks officially, and it's just been nothing but great content from these kids, and just the things that they've been coming up with has been incredible. So that's
beautiful, man. Yeah, that's beautiful. And what better person to be led than by the one and only Bryce?
Man,
I mean,
stop,
man, bro. No, I'm serious, man. The first time I walked into
just a kid from Akron, man.
First time I walked into the University of Toledo, man. I mean, you were someone that literally embodied what it meant to be a leader. And I mean, I saw that day one, dude, 100%. And, being able to watch some of your videos on this podcast, getting to learn a little bit more about the Bryce than what I saw, we didn't have, a relationship. I really don't think, when we were on the team, we knew of each other, we said hi, but, I definitely looked up to you. You were someone who embodied what it meant to be a leader, 100%.
Yeah,
so
man, much love.
You to
I love
have the platform, you to have the platform you have, man, and teach kids. I mean, I'm really like set on like, trying to teach kids myself too, man, because they're next up, and
We got about 30 you could teach, man. Believe it. It's gonna be an opportunity.
Absolutely, I'd love to,
We'll
man.
have to connect, man. We'll have to.
And I want to say, you too, man. I think I tried to invite you one time, Bryce, to the local real estate event that I go to in Cleveland. I couldn't make it, unfortunately, last time I invited you, and I don't think you went. But yeah, guys, second.
I might be in that one of those groups, honestly.
It's like the it's like the third Thursday. I might be wrong. It might be the second Thursday of the month. The second Thursday of the month, there's this Cleveland RIA, Real Estate Investor Association. It is where's it? It's like outside of Parma. I can't think of the name of the city, but it's a good event, man. Free food, free appetizers, and dude, nice. I mean, first time you go, it's free. They spit knowledge. You get to learn from a lot of people, and you get to talk to a lot of great people too.
And you said Independence, right? Independence, Ohio.
Independence. Thank you.
That's like right next to Cleveland. Yeah. All right.
Yeah, it's at a hotel. It's the Holiday Inn over there.
Oh man, that day that you that it was supposed to be, that's the same day that one of the people that we were close with passed away. I was tore up, man. But
sorry to hear that.
No, I was definitely interested, man. So I'm glad I thought I missed out for good.
No, yeah, it's there's an event every month.
Yeah, I'll definitely.
So I try my best to go out there. I go to Cleveland about twice a month. There's another real estate event. Networking event that I go to.
We need to go. We trying to get a property for AC, but that's another conversation. Let's get back. Takeaways. All right, 15 second takeaways. All right, so this is how we close. This is how we close our podcast every single episode. We do 15-second takeaways. Usually, honestly, it's like a minute, but we'll give you. I'll give you and Jovan, whoever wants to go first, just 15-second takeaway, something we can kind of share from the whole experience of this podcast.
Yeah, I'll go first. I'll let you go after me. I feel like you're gonna have a lot more to say, but I've always like to start by just thanking you for your presence on the show. It's greatly appreciated. The knowledge you gave, I think, is something that people need to go back and rewatch this episode again to really understand it fully, because you're not going to understand it the first time through. And then again, watch it again with an open mind if you didn't already. So it was great content. Again, take care of your family. It's bigger than you. Once you pass away, somebody's going to have to pick up that burden. Somebody's going to pick up that financial stress. So take care of them while you're here. Love each other while you're here. Randomly pick up that phone, call somebody, even though you feel like it might be a little awkward. Awkward is okay. So, and at the end of the day, keep climbing.
Yeah, awkward is definitely better than not being able to call. So,
right.
All right, you next, man. I'm gonna go last.
I'm gonna leave you guys with just go check out my Instagram. It's Mr_be_the_bank.
We got it right there. Just dropped it.
Yes, sir. And if you are interested in becoming or holding your own policy and infinite banking and creating your own policy, please hit this link. It's in my bio. Go to the calendar, book a 20-minute call. We'll talk real quick, some more about infinite banking and if it is something for you. And then from there, we can move forward and set something up for you. And like I said, make sure y'all go read some books and lead with love. I like that. So.
Yeah. And I'll add one more thing is, y'all know this podcast is full of love and full of positivity. So if y'all really are interested in doing that, Adam is good people. Tap in with him.
Yep. My takeaway is Thank you. The same thing Jovan just said about love, man. Valentine's Day just passed. All right. Valentine's Day just passed. So make sure y'all are showing love to y'all cutties, AC, and Mr. Be the Bank. All right. Show nothing but love. I mean, it really is. It costs nothing for you to hit follow. It costs nothing for you to hit like, right?
That's right.
So just show support. And then, the main takeaway is the main thing is that reading piece. So I'll disclose. Again, I said I usually go more than 15 seconds. I'm going to disclose for a second. So I've never had under a 3.0 in my life. I had it one time, all my life. But nonetheless, I struggled with reading. And I'll tell you why, because my kids that are listening to this, that work at my school or that go to my school, there used to be this thing called 100-book challenge. And we had to read as many books as we possibly could. We would always log it, and our parents had to sign it. And I would literally stare at the book for year after year after year after year after year. Got to the point where I was so stubborn that all I had to do was read. I would have learned so much. I would have loved the stories. And I would literally stare at the book, daydream, forget about it, and finally turn the page. And I never will read. And my parents would just sign it off, and I was not reading for years. Come middle school, they like, once you get to middle school, you don't got to read anymore. My test scores were so low, I was still in 100 book challenge. Jovan, I'm going to have to tell you some of the people that was in my class. I don't want to throw them under the bus because I looked at them as stupid. And I was like, I ain't stupid. Why am I in the class with these dudes? It's because I didn't read, right? So I was better than them in math and all these other subjects. I wasn't in the extra classes for that, but I literally had a class. Instead of studies hall, I had to do a 100 book challenge. So I say that long story to tell you guys, read, and don't just read what you're required to read. Get a little bit of extra reading in, okay? The Boss program down in LA, in Long Beach, shout out to them. They make every kid in that youth program read 15 minutes extra a day. Wow. And these kids are literally blowing my mind. I work for that company on the side, and they blow my mind with some of the ideas they come up with how they speak. With their vocabulary, they use words I haven't even heard of. And all they do, their concept is, all you got to do is read 15 minutes a day. That's it. You will be smarter and more prepared than anybody around you. And it works. I'm telling you, it works. I've seen these kids, right? So I'll give them a little shout out too on the podcast, Boss program in Long Beach. Shout out to them. But that's my takeaway. Adam, man, appreciate you, man. You put me on. I finally got a chance to really sit down and talk to you about it. I've just been watching the Instagram, man, and never reached out. So I'm glad you reached out, right? God works in weird ways, man. I'm glad you did because I'm finally put on, like truly. And I know I'm gonna have some more questions, so I'm gonna hit you up. But I appreciate you, man. And anybody watching, make sure y'all like, comment, subscribe, follow both Mr. Be the Bank and Always Climate Project. Might as well follow Jovan _25 and Bryce _28. All of that. You know what I'm saying? Much love to y'all. With that being said, love, peace, chicken grease. Keep climbing. All right, keep climbing.
And that's all it is. Where the love at? All that petty hating, we